Hello YouTube, Jim Baker here from Mountain Baker Tax Consultants, and today I'm making a video to explain how to file taxes for a limited liability company with multiple foreign owners. So a little bit of background on the limited liability company, the LLC. It's very popular for foreign individuals, for everyone in tax planning, because it's disregarded for tax purposes. So when I say disregarded, the results, the income, the expenses from the LLC are not taxed at the LLC level. They're passed on to the owner and taxed by the owner of the LLC. So if a foreign person owns a US LLC, they only pay tax on that income if they have a presence in the US. And we call that effectively connected income. So if you have inventory or offices or employees, or you do business, any kind of business in the US, then you have to pay taxes in the US on a personal level. Now, it's a little bit different if you have more than one member, if you have partners in your US LLC, whether there's one foreign partner or two, well, if one foreign partner, one US partner is different. So first of all, if there's one US partner, it's the results have to be all reported in the US, and there's non-resident withholding, but we'll talk about that next. An LLC with two foreign partners, two or more foreign partners, that has no effectively connected income, no connection to the US, and it has no business in the US, is just doing business internationally using the LLC for banking purposes or for legal liability protection, which is something we set up for our clients very often, then there's no tax to pay. However, every year, the LLC needs to file a partnership tax return, a Form 1065, with a statement. So I've done this for a number of clients, and it's really confusing when you're reading through the instructions and in the code. But what we do is we file a 1065, we list the partners on there, and we leave everything blank basically. And at the end, I have a long statement that I include for a lot of my clients that states that the taxpayer, the owners, have no effectively connected income and nothing subject to tax in the US. And this is something we have to do to file. If you don't file, there's penalties for every month that there's a late filing. And single member LLCs have a filing requirement as well, and that's Form 5472. That's you can check my other videos for that explanation. So if there's a partnership, if there's an LLC with more than one foreign member, no US members, all foreign members, and they don't have any business, no effectively connected income in the US, they still have to file Form 1065 to report the existence of the partnership. And what we would do is we wouldn't report the results, but we would include a statement showing why we're not reporting all the results. So that's like the one way to do it. You have the foreign partners. I'm repeating myself to emphasize the point. LLC, foreign partners, no effectively connected income, just file the Form 1065 with a good statement that we do. Now, on the other side, if you have foreign partners and you have some US business, or you also have US partners, then you would have effectively connected income. And that's where it gets complicated for using multi-member LLCs or partnerships. So in this case, you would also file a 1065. And that's a partnership tax return. However, Code Section 1446 requires that the U.S. partnership withhold tax at the highest rate of the highest U.S. rate for the type of partner that there is based on the level of income. So, for example, if there's two partners, 50-50, one's U.S., one's foreign, and they make $100,000, $50,000 of profit that's assigned to the foreign partner is subject to withholding at the highest rate, and I think it's 37%. I don't know the exact percent, but 37% personal rate. So the partnership has to pay these taxes on behalf of the individual, the foreign individual, and then the foreign individual would have to file the U.S. tax return to request a refund, because the tax rates don't start at 37%; they are progressive, so they move on up to 37% over time. They start at like 10%, and then they go up to 37% based on how much money you make. So you would get a refund, most very, very, very likely. So it adds a lot of filing complexity. It requires a prepayment of taxes, and there's penalties and interest for not doing the withholding. So that's something that has to happen. And then it's just a lot more compliance. The foreign partner will have to file, get a tax ID, and request a refund for this taxes. And this is all timely and complicated. But I mean, if having a partnership suits your business and it's the way you need to operate your business, it is what it is, and that's what we have to do. And just some compliance we have to deal with. But that's why you're searching this video, to know how to deal with the compliance. So there might be a better structure for you. There might be a different way to set it up, and this is something that we work with a lot with our clients. So if you want to talk about how you can better set up your business, or if you have partnership returns you've never filed and you need help filing the forms and abating penalties, very happy to help. Please reach out to me, support@mbtaxconsultants.com, and we can see if there's some way that we can help. And comment below if you have any questions. And also, good luck with your business ventures. Stay tuned to the channel, like, subscribe, and all that stuff. We really appreciate you coming by, and hope the information is helpful. So with that, I'll see you in the next video.